So in the world of trading, mastery of Japanese candlestick charts is not an option. It is a necessity to be a successful trader. Today's educational trading video will be all about Japanese candlestick charts. We will answer the question, what is a candlestick chart first and foremost. We will also take a look at how to read candlestick charts correctly. And we will also take a look at some history as well. You know, why are they even called Japanese candlestick charts? And at the end of the video, we will take a look at some candlestick tips and tricks that can be super useful even if you are already familiar with candlestick charts. So whether you are a beginner or a more advanced trader, I really think and hope you will get some value from this video. So without further ado, let's jump right into it. And really quick before we start here, I also want to mention that if you are only interested in a certain part of the video, make sure to use the video timestamps or chapters so you can jump to a specific point in the video if you're only interested in a certain part. But now guys, let's answer the question here. What is a candlestick chart? Well, here on the screen you can see two different types of charts. This chart here to the left is the candlestick chart, and the chart here to the right is what we call a line chart. And a candlestick chart is a chart that consists of multiple candles. So you can see that every bar on this chart that can be either green or red is what we call a candle or candlestick. And if we compare the candlestick chart with the line chart, we can see that on the line chart every candlestick is only represented by 1 point. So the big difference here between candlestick charts and line charts is that for the candlestick chart, every point on the chart or every candle will actually have 4 different price points. We will take a look at these 4 price points later on in this video when we take a look at how to read candlestick charts. But for now, let's just realize that every candle on the candlestick chart represents 4 different points. You may of course wonder, why do we even call this a candlestick chart? Well, the simple reason is because, as you can see, these bars here on the chart pretty much looks like small candles. And when it comes to trading, candlestick charts are much more popular than the regular line chart. And the reason for this is that the candlestick chart provides us with much more information about the price compared to the line chart. Alright, so now let's take a look at how do we actually read these candlestick charts. Well, as for all price charts, whether you are looking at crypto, stock market, the forex market, and so on, we read the chart like this. The price will always be to the left here, so you look left and you can read the price. In this case, you can see that the Bitcoin price for this example was at 29,300, and on the horizontal axis, so on this axis right here, you have the time. So you read this chart as the price was at 29,300 at the time of 1430. But now, what does each individual candle tell us about the price? Well, let's start by taking a look at the bullish candlestick. And the bullish candlestick is the green one right here. The candlestick itself can represent different time frames. So for example, every candle can be, for example, 1 day, or it could represent, for example, 1 hour, or it could even represent smaller time frames such as, 5 minutes. So let's say for the sake of this example that we're talking about a daily candle. So this candle represents 1 day. The price opens or starts here at the lowest point of the wide part of the candle. So the day starts right here, and during a bullish candle, the price goes up here, and at the end of the day, the price is all the way up at this point right here. But as you can see, for the candle, we also have a small black line below the green part and a small black line above the green part. This basically means that within the day, the price actually went down and reached a lowest point all the way down here, and it also went up here and reached a highest point all the way up here. So perhaps for this candle, the price might have looked something like this. It started, it went down, then it went all the way up here and went down and closed at this point right here. The wide or fat part of the candle is called the body or real body of the candle, and the smaller black lines are called candlestick wicks. The bearish candle is the same but opposite. So in this case, the price starts right here at the open price, During the day, the price went all the way up here to a highest point all the way up here. The price went down to a lowest point. The absolute lowest point of the day was all the way down here. And the day closed, or the day ended at this point down here. So perhaps this candlestick looked something like this. The price started to go down, it went up, reached a highest point all the way down here, it went down, the lowest point of the day was all the way down here, but before the day closed, the price managed to once again push up to this point. So now then, why are they called Japanese candlestick charts? And I want to start this chapter off with a quote from a famous rice trader in Japan that is called Munehisa Homma. I'm sorry if I pronounce this incorrectly, but Homma said, and I quote, "The psychological aspect of the market is critical to trading success." So Japanese candlestick charts derive their name from their roots in Japan. They were developed hundreds of years ago, all the way back in the 18th century in Japan by rice traders. This rice market in Japan is often cited as one of the first futures markets in the whole world. One of the best rice traders and the pioneer of candlestick charts was Munehisa Homma, and he was a rice merchant from Sakata. Homma realized some very interesting things about the rice prices. He recognized that traders' emotions played a critical role in the pricing of the rice contracts. After realizing this, Homma developed a charting system where he tried to capture the emotions of the traders in the rice market. He introduced candlesticks and candlestick patterns to represent price movement and the trader's sentiment. And by the way guys, if you want to learn more about candlestick patterns, I have a pretty comprehensive video about candlestick patterns, and I will make sure to leave that video up in the corner in the eye of this video. With that said, it took a while for modern adoption to happen. His candlestick charts were first introduced to the Western world in the late 20th century, and it retained the Japanese name to honor their origins. So now guys, let's take a look at some candlestick tips and tricks. And I want you all to look at this candlestick right here. This is what we call a bullish hammer candlestick. And this is a candle that indicates that a downwards trend is likely to reverse to the upside. This is one of the most common candlestick patterns, and as I mentioned earlier in this video, if you want to, make sure to check out my video about candlestick patterns. I will make sure to have that video linked down in the pinned comment of this video. One very useful trick when it comes to candlestick patterns is that we need to be able to look at a candlestick on one time frame and be able to tell how the price action looks like at another time frame. So let's for example say that this hammer right here is on a 15-minute time frame. So this is how the price moved during 15 minutes. So let's draw our bullish hammer right here. We have a candlestick that looks something like this, right? And this is a 15-minute time frame. But how would this candlestick look like on a 5-minute time frame? 15 divided by 5 is 3. So on the 5-minute time frame, this candlestick will be represented by 3 candlesticks. And remember guys, that the price for the candle opens right here. So we know that the price on the 15-minute time frame starts at this point right here. Perhaps the first candle looked something like this. We had a red candle going here towards the downside. The next candle could have looked something like this. Perhaps the price started to go up here, but during this 5-minute candle, the bears managed to push the price all the way down here. However, we know that before the 15-minute candle ends, we know that the price must close all the way up here. So perhaps the last candle looked something like this. It ended with a strong green candle towards the upside. So this is a very useful skill, to be able to look at one time frame and try to imagine how the price looked like at a lower time frame. This can help you improve your trading a lot. This example right here was of course only an example of how the price could have looked like. There are an infinite amount of variations here, but it is important to be able to look at a candle, zoom into the shorter term time frames, and be able to get at least a mental picture of how the price looks like on the lower time frames. My next trick here is to combine candlestick charts with support and resistance. Candlestick charts are very powerful and they are an essential tool for every serious trader. However, if you use them alone without any other technical analysis tools, they have very limited predictive power. So now guys, I highly recommend you all to watch this video right here. I will pop it up right here. It's a video about support and resistance, and if you use your knowledge from this video together with that comprehensive video about support and resistance, I'm sure you will take your next step on your journey towards being a consistently profitable trader.